In September 2024, Microsoft signed a 20-year deal to buy every watt from a nuclear reactor on the grounds of America's worst nuclear accident. Constellation Energy is investing approximately $1.6 billion to restart it, and not for cities but for AI data centers. 3 Mile Island, the most infamous name in American nuclear history, is coming back online. The reason has less to do with software than with something far more basic. Microsoft and Constellation Energy formalized their agreement in September 2024 with a 20-year power purchase contract that is both direct and exclusive. Under the terms, Microsoft will take the entire output, approximately 835 megawatts of net carbon-free power from the reactor now renamed the Calpine Energy Center. Constellation, as owner and operator, is investing about $1.6 billion to bring the dormant Unit 1 back online, with commercial operations targeted for 2028. The deal is structured so that every megawatt generated by the plant is committed solely to Microsoft's data center operations, rather than entering the broader regional grid. This arrangement is not symbolic. It is a dedicated procurement move designed to secure a stable supply of electricity for AI infrastructure at a scale that rivals the consumption of a mid-sized city. According to Constellation's public statements, this is the first instance of a retired U.S. nuclear reactor being revived for a single corporate customer, with no other buyer receiving any portion of the plant's output. The facility's new name, the Calpine Energy Center, reflects both a technical restart and a shift in purpose, from serving general utility customers to functioning as a private energy source for industrial-scale computing. The exclusivity and length of the contract, along with the capital commitment, signal a clear recognition by both companies that electricity availability has become a binding constraint for AI growth. This is a calculated business decision, grounded in the physical demands of modern data centers and the rising value of uninterrupted, carbon-free baseload power. 3 Mile Island occupies a singular place in American memory. On March 28, 1979, Unit 2 of the facility suffered a partial core meltdown. The event became the most severe commercial nuclear accident in United States history, halting the momentum of new nuclear construction nationwide and casting a long shadow over public policy. Yet the plant itself was always two separate reactors. Unit 1, the focus of today's restart, was not involved in the 1979 accident. It continued operating for decades with a clean safety record, generating electricity without a major incident. Public perception, however, rarely separates the two. For most people, 3 Mile Island is a shorthand for nuclear risk, and the distinction between Unit 1 and Unit 2 is easily lost. This creates a reputational sensitivity around any attempt to bring power generation back to the site. When Unit 1 was retired in 2019, it was not because of a safety issue. It was because of unfavorable economics. Low natural gas prices and growing renewable capacity made continued operation financially untenable. Even so, the legacy of 1979 lingers. The decision to restart Unit 1 now means confronting decades of public anxiety and regulatory caution, even as the technical record for this specific reactor remains strong. The plant's history is not only an engineering story, but a case study in how a single event can define a place for generations, regardless of the facts on the ground. Satya Nadella stepped into Microsoft's top job in February 2014, inheriting a company widely seen as past its prime. At that time, Microsoft was still defined by its legacy in desktop software and a reputation for slow, defensive moves. Nadella, trained as an engineer and known for his methodical approach, changed the company's trajectory by pushing hard into cloud computing. Azure, Microsoft's cloud platform, became the backbone of this shift, absorbing capital and attention as the company reoriented itself away from packaged software and toward distributed infrastructure. The change was not only technical, but strategic. Microsoft began to think in terms of platforms and long-term control over the resources that underpin digital growth. This mindset set the stage for the company's 2019 decision to invest $1 billion in OpenAI, forging an exclusive partnership that would tie Azure's future to the rapid progress of artificial intelligence. By the mid-2020s, Microsoft's public profile had transformed. No longer just a vendor of office tools, it was now an infrastructure provider for the world's most demanding AI workloads, hosting the majority of OpenAI's inference operations and supplying compute for a range of industrial and commercial customers. The company's ambitions required not only technical leadership, but physical resources, especially electricity. In this context, securing long-horizon access to carbon-free baseload power fits the same logic that drove Microsoft's investments in cloud and AI. The 20-year commitment to a single nuclear plant is an extension of the same playbook. Lock in the inputs that determine the company's capacity to scale, regardless of volatility in the broader market. For Nadella's Microsoft, controlling the flow of electrons is now as important as controlling the flow of code. Goldman Sachs projects that by 2030, U.S. data centers could draw as much as 8% of the country's total electricity supply, more than double their current share, which hovers around 3%. This is not an abstract forecast. It reflects a physical shift. The rise of artificial intelligence is transforming data centers from background infrastructure into some of the largest single sources of continuous power demand on the grid. An AI-focused data center can now require as much electricity as a mid-sized American city, running at full load around the clock. These facilities do not simply want electricity, they need it to be available every second, without interruption, to keep AI training and inference running at industrial scale. Intermittent renewables like wind and solar have become much cheaper, but their output depends on weather and daylight. For AI workloads that cannot tolerate downtime, this variability is a problem that battery storage alone cannot fully solve at scale. Microsoft's decision to contract for the entire output of a dedicated nuclear reactor is a direct response to this constraint. According to Bloomberg, Microsoft agreed to pay a premium price, reportedly at least $100 per megawatt hour, with some estimates closer to $112 per megawatt hour, well above the spot prices for wind and solar in the same region. The logic is clear. In this context, the priority is not the lowest possible price per unit of electricity. It is guaranteed 24/7 supply that is both carbon-free and immune to market swings. This is a buyer's market defined by reliability. Microsoft is not chasing the cheapest kilowatt hour. It is buying the certainty that its AI clusters will never go dark. The 20-year agreement for nuclear baseload power is less about hedging against future price increases and more about securing the physical foundation for the next generation of cloud computing. The premium reflects the value of certainty in a sector where a few minutes of downtime can mean millions of dollars lost, and entire AI projects put at risk. Constellation Energy approached the Microsoft deal from a position of scale and leverage. As the operator of 21 nuclear reactors, the company is often described as the country's leading producer of carbon-free electricity. Joe Dominguez, Constellation's chief executive, publicly characterized the Microsoft contract as the largest power purchase agreement the company had ever signed. The contract's structure, exclusive, long-term, and tied to a single corporate buyer, offers a level of revenue certainty rarely seen in the sector. On the day of the announcement, Constellation's stock reportedly climbed by about 22%, a reaction that reflected both the immediate value of the deal and the broader market's appetite for stable, clean energy assets. The company is not only investing $1.6 billion to restart the Crane Clean Energy Center, but is also moving to extend its operating license through at least 2054. This long runway supports a balance sheet strategy, anchoring decades of predictable cash flow. In the background, Constellation's reported pursuit of a $26.6 billion acquisition of Calpine signals an even larger ambition to consolidate its position as the dominant player in U.S. carbon-free generation. The Microsoft agreement, then, is more than a single transaction. It is a calculated move to monetize reliability and lock in premium pricing at a time when energy security is becoming a defining constraint for the digital economy. Within 18 months of Microsoft's announcement, nuclear energy shifted from a one-off experiment to a recurring feature in the expansion plans of the largest technology firms. Amazon Web Services began laying groundwork for infrastructure adjacent to the Susquehanna nuclear plant, aiming to secure its own reliable power stream for data operations. Google entered into a partnership with Kairos Power to study the use of small modular reactors, targeting a future where AI workloads run on firm, carbon-free electricity. Meta, too, circulated requests tied to nuclear-backed supply for its growing data center footprint. TerraPower, backed by Bill Gates, accelerated its advanced reactor projects, seeking to offer new options for hyperscale buyers. These moves are not coordinated, but they share a clear logic. For the first time, the physical availability of electricity is a boardroom variable limiting how fast AI can scale. In Pennsylvania, the economic footprint is already substantial. The restart of 3 Mile Island Unit 1 and related projects are estimated to add around $16 billion to state GDP and support approximately 3,400 jobs, though these figures remain projections. Regulatory filings show a path toward commercial operation in 2028, but the timeline carries risk. Licensing, safety upgrades, and environmental reviews must all proceed without delay. Across the industry, the pattern is unmistakable. Major tech buyers are no longer just seeking renewable credits or grid offsets. They are negotiating for direct, long-term control over the power sources that will define the next phase of artificial intelligence. Today, a reactor once marked by crisis is being reactivated to fuel artificial intelligence. Microsoft's 20-year agreement secures every megawatt from 3 Mile Island Unit 1, beginning in 2028. The physical limits of energy now shape the next generation of computing, quietly redrawing where power, risk, and ambition intersect.